What's up, good people? Happy New Year. This is the first video of 2022. I plan on doing these weekly. Most likely it'll be on a Friday, Saturday, or Sunday. And my desire is to teach you about options trading through my trading. So I'm going to be sharing with you my trades, explaining what options are all about, explaining what my trading system is about, in hopes that you will get a better understanding of the risks and rewards of options trading. So what you're going to see is you're going to see me making several trades weekly, and I'm going to be sharing the results with you. So it'll be live trades showing you the losses and the gains. First and foremost, I am not an investment advisor. I am simply someone who trades and risks his own capital to make money in the markets. So I'm not a professional. Anything that I share with you on this video, on these videos, is simply for informational purposes. I am not advocating that you buy or sell a stock or option. So this is strictly information, people. And again, my desire is to give you a better understanding of what options is all about. I've been doing it for years, and I know a little something. So what I'll be sharing with you is practical information. It's when I say practical, if you read a lot of books, you'll get a lot of theory. What you'll be getting from me is practical information, because I trade daily. Last year I had a spectacular year. This year, I know it's going to be awesome. It's going to be a better year this year, because I learned a lot last year. And with me making a few tweaks to my system, I know it's just going to be a better year. So let me get into the trades that I did this past week. I made 4 trades this past week. Now, to explain to you a little bit about my system, is for those that don't understand charts, and I'm going to be making videos later on breaking down charts, breaking down options, but for the sake of giving you a slight understanding now, these bars that you see, these vertical bars, represent a time period of trading. You can analyze the market in any time frame that you desire. Most brokerage accounts and trading software will give you different time intervals. With this software, I can evaluate or look at the market minute by minute. Every bar represents 1 minute of trading. It goes from a minute to yearly. This is a yearly chart on Uber. So every bar is 1 year of trading. You see, Uber had its IPO in 2019, so it was introduced to the public markets in December of I think it was, I'm not sure what month, but in 2019, that's when it became public for trading. So this is a yearly chart. So it's going back 3 years, 4 years, or this would be the 4th year. So the time frame that I use a weekly, and I use a daily, and I use a 2-day chart. I don't go under a daily chart. Like, see, you can go to a 4-hour, 2-hour, and again, I showed you a minute. I trade I trade the higher time. I trade the higher time intervals. I'm sorry. Week. I don't go below a daily. And the reason for that, my theory on it, the longer the time frame, the deeper the pockets. What I mean by that is those who look at minute bars or look at, say, a 60-minute bar, their profit objectives are small, meaning they're trying to gain maybe a dollar or two on a stock. So, and their pockets may not be as deep as those who are looking at the weekly charts. So the longer the time interval, the deeper the pockets, and the longer the profit objective. So if you get a buy signal on an hourly chart, it's not as significant as getting a buy signal on a weekly chart, if that makes sense to you. Most of the traders who trade these small time intervals are looking to scalp a certain amount of profit out of a move. So they don't have any longer term profit objectives, as do those with the deeper pockets. So I don't go below a daily. I haven't really had much success with it. And from my analysis and through my trading, the weekly, the daily, and the 2-day charts is what I use. But everyone is different. I'm just sharing with you what I use. Now, the red bar simply means that there were more sellers than buyers, and that bar closed on a down. The green means there were more buyers than sellers, and that price on the bar is greater than the previous week's price or the previous day's price, depending on which chart you're looking at. The yellow bars is actually my trading system giving me a signal. My indicators are giving me a signal to sell or to buy. The blue is to buy, the yellow is to sell. So, and the way that I approach it is when I get a sell bar on the weekly, which the weekly closes every Friday. If I get a sell signal on Friday on a stock, if it doesn't line up, if the daily isn't saying the same thing as the weekly, I will wait till the next week till the daily gives me the same signal, and then I'll take the trade. So let me give you an example of a trade that I did Friday. Disney. This check here, these are my indicators here. Disney is giving me a sell signal. This is Friday the 7th. This was the last week of trading, this past week. So that bar closed. I got the sell signal, and it gave me a sell signal on the daily chart as well. So I took the trade. And let me show you. Show you what that looks like on Disney. These are the contracts. These are the option contracts that you can buy and sell to make bets on how a stock is going to move day to day or week to week. There are different strikes. These are what you call strike prices, meaning these are the prices where people are betting that the stock will go. Right now, Disney is at 157.83. So, bring that back. 157.83 is where it closed out on Friday. The contract that I'm in, pull it up. I am in the 155 put. You can see there, I'm long the put. So let me back up. Calls simply means you're betting for it to go up. Puts mean you're betting for the stock to go down. Now, people buy options for different reasons. Most people who buy and sell options, they do it, they do it for the reason that I'm doing it. They seek to make money. But you do have people who use options to hedge their portfolio, which is a whole nother aspect of option trading. How I use options and what I will be explaining to you in the future is I simply buy and sell the options. If I think Disney is going to go down, like I did, I bought it on Friday. It's the 155. I bought it for $88. I bought this contract for. So my bet is at 157.83. I'm betting that it's going to go down almost $3 by Friday's expiration. I trade weekly options. So by me getting in Friday, I have pretty much 7 days from Friday to next Friday for the move to happen. Now, as time goes on, let's say Monday, Tuesday, Wednesday, if the move hasn't happened, the value of this contract is going to go down. The closer and closer you get to expiration, the value of the contract goes down. It's called time premium. Time value goes down the closer and closer you get to expiration, especially if it hasn't made your predicted move. You see what I'm saying? So the value of this option will go down based on the stock's movement against your bet and the closer and closer you get to expiration. So just know all of these contracts that I will be buying, they have expiration dates, and they always expire on Friday because I trade weekly options. You do have monthly options where they expire the third Friday of every month. You do have quarterly options, but I trade weekly options. So in this case, I'm betting for Disney to go to 155. It's at 157.83, so that's a $2.83 move. Now, if this move happens, let's say it goes down to, this is where it needs to go down to. You can see here, I have 5 days, the 155 put. I'm up $2 on it. Say it goes to 155 by Wednesday. The value of this contract would go up probably 200%, maybe more, depending on how active they are in the options. If it goes down, if the stock goes down below 155, then you're looking at what I call a home run trade. Well, I'll make 4 times my money. My system is predicated on seeking those home runs. And those home runs do occur, I would say 2 to 3 a month, based on the stocks that I watch and that I have in my watch list. And I have this is my watch list. I got Apple, Airbnb, Amazon. I got all the heavy hitters in it. Boeing, Baidu, Beyond Meat, of course, Disney. These are all of the stocks that I have. And I pick these stocks because they have the most volume, the most activity in them for trading. Tesla, Square, Riot. But let me show you the trades that I did this past week. I went 1 for 4 this past week. Let me see. Square, I had a position in Square where I risked $92. Now I go 5%. I don't risk more than 5% of what's in my trading account, and I spread it out amongst multiple trades. I did 4 trades this past week: Square, Riot, Zoom. I lost money on Square, I lost money on Zoom, and I lost money on SPCE. Now let me show you that. Let me show you those trades to give you a better understanding. Okay, let's look at Square first. Square, I got a buy signal here, 12/31, which was the previous Friday. I got a buy signal here, and I bought the position. I want to say I bought it on, let me see, that's I bought it on the 4th. So I bought it on Tuesday here, but as you see, it traded down, so it never even went to my strike. The contract that I bought was the 172.50, and Square was at 161.51 on that Friday. So it was pretty much, $10 out of the money, a little over $10 out of the money. So it would have had to make a $10 jump for my position to be profitable. But on Tuesday, it went even lower. It went to 156. So, 156, and I bought the 172.50. So that was even, it would have had to make an astronomical jump in order for me to be profitable. So this trade was a loss of $92 plus commissions. It expired worthless. Now, you can sell, once you buy an option contract, you can sell it at any time. If Square would have made its move, say Wednesday, and went above 172.50, and that contract went from $92 to say $300, I could have sold and took my profit. You can sell it any time. When it doesn't go in my favor, I simply let the contract expire worthless. So it expired worthless. I lost my whole $92 on that position. Let's go to the next one. Zoom. No, hold up. Riot. Riot. I had a buy signal on it based on the formation, and I took the trade on the 3rd, which was Monday. They had been, this stock is linked to crypto, so whatever typically crypto or Bitcoin does, Riot will move with it. So it's a proxy for crypto. So I saw the crypto selling off, and I just bought an option. I bought a call option, and I bought the 21 call, and I bought it on the 3rd. It made that pop the next day. It went up 7%. Now, early in the week, on a Monday or Tuesday, depending on how active traders are in a particular stock or in the options, a 7% move should give you 300-400%. In this case, because what is called the volatility is so great in these crypto stocks or crypto linked stocks, I didn't profit as much on this trade. I bought the contract at $80. Let me show you this. All right, let's see if I can. All right, here, we're here. I bought the contract at $80 here, and I sold it at $170. So I made $83, and that's on a 7% move. So when I saw that the option wasn't really behaving like I thought they would, I got out of the trade. And it's a good thing that I did, because crypto sold back off. Riot sold back off. You see that? It closed at 24.38 on Tuesday. And on Friday, it was at $20.36. So it was a slight winner. My next trade was Zoom. Zoom. Zoom was my next trade. Had the buy signal here. And I got in the 187.50 contract. And I got in that on the 4th too as well. And this expired worthless. I had $123 at risk. And it expired worthless on Friday. So I lost my whole position. And same for SPCE. So I'm 1 for 4 for the week. I bought SPC. I had in the 14 contract and traded down. So 1 for 4. And I ended up for the week losing $252. Let me show you my spreadsheet that I created. So this is what I had at risk, and this is what I lost for the week. The trades that I took on Friday, I placed 4 bets on Friday for this coming week. We'll see how that goes. So, I'm in DraftKings. I think DraftKings is going to go up this week. So I'm in the 28 call on DraftKings. Right now it's at 27.24. I'm in Riot again. I bought another Riot position. I'm in the 21 call. It's at 20.36. So it doesn't have to make a strong move, but we'll see what happens with that. And of course I showed you Disney. Plan for Disney to go down. Now I do have other signals for the week, but again, I told you, if I wait for the daily to give me the same signal as the weekly. Like, this is a lineup. I got the yellow bar here for the weekly, yellow bar on the daily. So this is the reason why I took this trade. The same for Riot as well. Riot gave me a buy signal on both time intervals. So I took that trade. And DraftKings. Now what I'll be looking at Amazon, which Amazon options contracts are really expensive. So I'll be looking at Amazon going into like Wednesday, Thursday, and Friday when those contracts are cheaper. I'm looking at Amazon. I'm looking at Baidu, which I probably should have took Baidu Friday because it is a line up there. And MU, Micron Technology. I'm just simply waiting for a yellow bar on here, and then I'll buy a put on that position. And let's see what else. Google also. Oh no, that's not right. I'm sorry. Baidu, Amazon, DraftKings, Micron, Riot, PayPal. These are just the stocks that I'll be looking If I see it, like I got the blue buy signal on the weekly chart, but I need confirmation from the daily. Same from when I need more confirmation. Tilray was one of my biggest trades last year. Even though it's gave this formation to me is questionable. So that's why I didn't take that trade. And SPCE also. So we'll see what happens. Again, I will be making this video is kind of long, which I didn't want it to be, but for the introduction to what I'll be sharing with you guys, it was necessary. Again, I'll be doing maybe some videos midweek, explaining to you the charts and explaining to you the options so you can get a better understanding of that. And just, my overall approach to options trading. I hope this was helpful. And until next time, you guys take care, be safe.